Well, let's bring in Ted Seifried. He's the world traveler with Zaner Ag Hedge. He was in London last week, now back in the States, I understand. Good to have you back stateside here, Ted. Maybe the trade was enthused to see you back because it was in the dumps earlier today. All of a sudden, the grain market's taken off. What is it that's going on?
Yeah, well, first of all, Marlon, it's good to be back. So thanks for that. We had some pressure overnight and into this morning, into the open, based on the idea that Argentina got a little bit of rain and there's a little sprinkling of rain in that forecast. Okay, but it's still not enough. And we are still operating under the bullish report that we had from last Thursday. Although I am going to say that it was mostly bullish towards expectations. We had a very surprising drop in production numbers. But at the end of the day, the ending stocks numbers didn't really change all that much. However, it did take away a bit of the bearish story for corn, for example. We saw 150 million bushel reduction in exports. The big bear cry here for the last couple months had been, oh, but the USDA is going to have to lower exports aggressively, and that carryover is going to really inflate and get much bigger. Now you can't really say that as much because of the sharp drop, unexpected drop in production. So you still have those buyers out there that are figuring that, if we do start to see exports pick up really aggressively, then the USDA might have to reverse themselves, and we are going to have some really tight balance sheets. So while we continue to have the weather concerns that we have for Argentina, and until we start to get the Brazilian crop online, which, by the way, their export crop for corn is second season crop, there still is this sort of perceived tightness that we have in these balance sheets. And so when you start out lower, there are those buyers out there. There is that little concern over the need for price rationing and what happens if demand were to pick up and those exports really do start picking up. And then export inspections were really quite good, especially for soybeans. So reversal higher, this is a bit of a breakout. You've kind of broken out of these wedge-shaped patterns that you had been forming in both corn and soybeans. It's kind of suggesting we might see some more follow through the upside unless this is a major head fake.
Interesting. And then we'll have to see if we have a turnaround Tuesday, Wednesday, if that makes sense.
Turnaround Wednesday.
All right. We'll come back in a moment. We'll take a look at our livestock trade right after these messages. Come on back. All right, we're back with you, and we're talking with Ted Seifried of Zaner Ag Hedge in Chicago. All right, Ted, the grain market's bouncing back. But what's good for the grains, is that bad for the cattle market here, if I can get it out?
Bad. You gotta think feeders are a little bit concerned about the reversal higher in corn, right? I mean, today is a technically significant day for corn. If we close up here, which, hey, we're coming into the close, it's looking pretty good. So that has to put a little bit of fear into the cow complex as a whole, but mostly into the feeder cattle. And there you have it, down 160 in the March. That's a pretty significant day. I will say it could be worse. So you take it with a bit of a grain of salt. But yes, that higher corn market is a bit of a concern.
All righty. Now, what about hogs? Do you think they have made the turn? Have they found the bottom now?
Well, technically speaking, we had gotten very, very oversold. So we needed to see some sort of a technical bounce. So far, I kind of feel like that's all we have here. The best thing I think we can hope for at the moment is that we've defined the low end of the range and that we're going to continue to trade this broad, very choppy sideways range that we've been in for the past, 6 months or so. And I kind of think there's a good reason for that. You really do have sort of a value area. Yes, we did see hog weights really kind of expand because of the weather that we had in December. We've been chewing through that upfront supply. Domestic demand has been a little bit questionable, and we had that big cancellation from export sales a little while ago. So, we had some kind of negative news that we had to digest. At this point, maybe we've digested that. Maybe we have reason to kind of gravitate towards the middle end of this range, kind of correct this technical oversold picture that we've had. But then where we go from there, I'm not so sure we have the fundamentals to go up and challenge those highs once again.
All right, so right now on live cattle, let's take a look at our quotes from bar chart. And up to the moment, we have February live cattle 85 lower at 156.87. Over on the feeder cattle side of things, as Ted mentioned, we're down $1.65 on the March at 181.22, and on lean hogs today. April still 92 higher at 88.20, even though it's off of its earlier high by about 90 cents. Ted, great stuff. Good to have you back in the U.S. Appreciate it. Ted Seifried of Zaner Ag Hedge with us. Suzanne is back with you with a very special guest.